All right, so we've got a whole stack of research here on accounts receivable financing.
Yeah.
And
What to unpack?
yeah, a lot to unpack. And I think one of the first things that comes to mind for me is this just like a loan?
Well, that's one of the big misconceptions about it.
Right.
It's not a traditional loan.
Yeah.
It's really a way to kind of unlock the cash that's already tied up in your invoices.
Mm-hmm.
So you've done the work, you've delivered the product or service,
Right, you've sent the invoice.
you sent the invoice, and now you're just waiting for the payment.
You're in limbo.
Exactly. And that waiting period can be a real killer for businesses, especially small businesses or businesses that are growing rapidly.
Right. So instead of just sitting there and twiddling your thumbs waiting for the money to come in, this is a way to sort of fast forward that process.
Yeah, think of it as like a fast forward button for your cash flow.
Okay.
You're essentially turning those invoices into immediate cash.
Interesting. And that's something that any business owner would want, right? Get paid faster. Who doesn't want that?
Exactly.
But I think a lot of business owners listening are probably wondering, is this right for my business?
Yeah, that's a great question.
And I think before we even dive into, the nuts and bolts and how it works and the different options and all that stuff, I think it's fascinating that this isn't even a new concept.
Not at all.
Like this goes way back.
It has ancient roots.
Right?
If you think about it, even in ancient Mesopotamia,
Oh, wow.
merchants needed ways to finance their trade expeditions.
Yeah.
They couldn't just wait months for payment to arrive from across the desert.
Right.
So they developed these systems where essentially someone else would buy the right to those future payments,
Huh.
giving the merchant the capital they needed right away.
So it's like the original, getting an advance on your paycheck kind of thing.
Exactly.
Yeah.
It's fascinating how some of these basic financial needs have driven innovation for centuries.
Yeah, and that's what I love about these deep dives. Sometimes we learn about these things that are so common today, but they have this long history that we just don't even think about.
Yeah, for sure.
So we've got ancient Mesopotamia, but I'm guessing this practice evolved over time, right?
Oh, absolutely. Fast forward to medieval Europe, and you see similar practices popping up. Merchants would sell their receivables to financiers at a discount
Mm.
to get cash up front and pass on that burden of collecting the payment to someone else.
I can see how that would be appealing, especially back then when you'd have to, travel for days to go collect a payment from a duke or something.
Yeah, no kidding.
So how did we go from, these early forms of accounts receivable financing to the, more sophisticated systems we have today?
Well, I think the real turning point was the Industrial Revolution.
Okay.
Suddenly businesses were operating on a much larger scale.
Right.
They needed more capital to keep up with production and expansion. And this led to more formalized methods of accounts receivable financing. And specialized companies emerged to handle these transactions.
So it really evolved along with the needs of businesses.
Exactly.
And I'm guessing technology has played a huge role in shaping how it works today.
Absolutely.
Yeah.
In the 20th century, you had the rise of commercial banking and financial regulations, which added more structure to the industry.
Right.
And then, of course, computers and the internet changed everything.
Yeah.
Online platforms and fintech innovations have made accounts receivable financing much more accessible and efficient.
Especially for smaller businesses, I imagine.
Especially for smaller businesses.
Okay, so we've got this historical foundation, but let's get down to brass tacks here. Why should a small business owner in today's world even care about this stuff?
Well, let's think about it this way. Every business has a cash flow cycle, right?
Okay.
You provide a service, you send an invoice,
Right.
and then what? Yeah.
You wait.
You wait.
Sometimes a long time.
Sometimes a long time, 30 days, 60 days, sometimes even longer.
Yeah.
And that waiting period can be killer, especially if you've got bills to pay employees, to pay supplies to order.
It's like having all this potential cash just trapped in a time capsule.
Exactly.
So accounts receivable financing is like the key to unlock that.
Exactly. It bridges that gap between delivering your product or service and actually getting paid.
Right.
And that can be the difference between struggling to make ends meet
Right.
and having the capital to invest in growth, to take on new opportunities, or even just to weather a tough economic period.
Well, it's not just about surviving.
No.
It's about thriving.
Exactly.
It's about taking your business to that next level.
Yeah, you got it.
Okay, so we've established that this can be a really powerful tool,
Mm-hmm.
but I'm guessing there are different ways to approach it.
Oh, for sure.
It's not a one-size-fits-all kind of thing, right?
Definitely not. There are different types of accounts receivable financing.
Yep.
Each with its own mechanics and nuances, and understanding those differences is crucial for choosing the right fit for your business.
All right, so let's break it down. Let's break down those different types so we can see what's on the menu.
Let's do it.
What's the first option?
Okay, so the most common type is called factoring.
Okay.
So let's say you have an invoice for $10,000 from a reliable customer.
All right.
With factoring, you essentially sell that invoice to a factoring company at a discount.
Okay, so instead of waiting, 30 days to get that $10,000,
Right.
I get a portion of it up front.
You got it. They might give you, let's say, $8,500 right away.
Okay.
And then the factoring company takes over collecting the full amount from your customer.
So I'm essentially trading a little bit of profit for that instant cash flow?
That's right.
But what's the catch?
Well, one thing to be mindful of is transparency.
Okay.
You need to communicate clearly with your customers about the factoring arrangement.
Right. I don't want them to be surprised when some other company suddenly starts contacting them about the bill.
Exactly. And you want to make sure that the factoring company you choose has good customer service practices.
Yeah.
You don't want to damage those customer relationships.
Makes sense. So factoring is one option. What else is out there?
Another approach is called invoice discounting.
Invoice discounting.
Yeah, this one is a bit more behind the scenes.
Mm-hmm.
You use your unpaid invoices as collateral to borrow money from a lender,
Okay.
but you still handle collecting the payment from your customer.
Oh, so my customer doesn't even know I'm using financing.
Exactly. It's more discreet.
Okay.
Can be good for maintaining those direct customer relationships.
Yeah.
But you still bear the risk if the customer doesn't pay.
Okay, so with invoice discounting, I keep more control,
You do.
but I also have more responsibility.
More responsibility, exactly.
Got it. Is there a third option we should know about?
There is. It's called an accounts receivable loan.
Accounts receivable loan.
Think of it kind of like a line of credit
Okay.
that's based on the value of your outstanding invoices.
Mm.
You can draw down funds as needed,
Right.
and repayment is typically tied to your sales cycle.
So as those invoices get paid, the loan gets paid down.
Exactly.
Okay. That seems pretty flexible. But how is an accounts receivable loan different from just getting a regular bank loan?
That's where it gets interesting.
Okay.
Traditional bank loans usually focus on your overall credit score
Mm-hmm.
and collateral. But accounts receivable financing is more about the quality of your invoices
Okay.
and the creditworthiness of your customers.
Interesting. So even if my business is new
Yeah.
and doesn't have a long credit history,
Mm-hmm.
I could still qualify if I have, great customers
Exactly.
who pay their bills on time.
And that's a big deal for a lot of growing businesses.
Right.
Plus, approval times are often much faster with accounts receivable financing.
Okay, speed can be everything in business.
Absolutely.
So we've got factoring, invoice discounting, and accounts receivable loans.
That's right.
3 flavors of the same basic concept, turning those unpaid invoices into usable cash.
Exactly.
But before I jump in, I need to know, what are the real advantages here? What makes this different from just, tightening my belt or waiting it out?
Well, beyond just speeding up cash flow, accounts receivable financing can be a real game changer for growth.
Okay. How so?
And let's say you get a huge order from a major client,
Okay.
a real make-or-break opportunity, but fulfilling that order requires a big upfront investment in materials and labor.
Right. And I might not have the cash on hand to actually take that order,
Exactly.
even if it's, a guaranteed win long term.
That's where accounts receivable financing can step in.
Okay.
It gives you the capital to seize those opportunities
I see.
that would otherwise be out of reach.
So it's not just about staying afloat.
Oh,
It's about reaching for those next level wins.
you got it.
I like that. Are there any other sort of hidden benefits I should know about?
Another advantage that often gets overlooked is the reduction in administrative burden.
Okay.
Think about all the time and energy you spend chasing down late payments.
Ugh, it's the worst.
Right. Well, with some types of accounts receivable financing, that responsibility shifts to the provider.
So it frees me up to actually focus on, running my business
Exactly.
and making those big moves we were just talking about.
That's the idea.
Yeah, but let's be real here. There's got to be some downsides too, right?
Of course, no financial tool is perfect.
Right.
And one of the biggest considerations is the cost.
Oh.
Accounts. Receivable financing can be more expensive than traditional loans, especially if you factor in all the fees.
So I need to do my homework and compare costs carefully
Absolutely.
before making any decisions. What else should I be wary of?
Another important point is the potential impact on customer relationships.
Okay.
If a third party starts contacting your customers about invoices, it could raise some eyebrows.
Yeah, I definitely don't want to create any awkwardness or damage a good customer relationship.
Exactly. So transparency and clear communication are so crucial.
Right.
You need to choose a reputable financing provider
Okay.
who understands the importance of customer service.
Got it. So cost and customer relationships are two big things to watch out for.
Hmm.